for Flux's former leaders after its former executive board were charged in court today.
Now, this was revealed to the Singapore High Court by Flux's lawyer Manoj Chandrasekara at a closed-door case management conference today.
Once a shining beacon of the regional economy, Flux made headlines on May 18, 2019. But this time, it was for the wrong reasons. Tuaspring, a desalination facility that cost the company 1 billion Singaporean dollars, was taken over by the Public Utilities Board for free. Tuaspring is Asia's first fully integrated water and electricity plant and the biggest saltwater treatment facility in Singapore. Flux branched out from its traditional water treatment business and into the energy sector with the winning bid of this project. It turned out to be a turning point in Flux's 30-year existence. However, the collapse of the Flux has shocked many in some questions. How did Olivia Lum's leadership cause the downfall of a firm that was once a leader in Singapore's commercial world? Many onlookers and investors want to know whether the company's failure was caused by any errors in judgment or strategy. The rise of Flux. The story of Flux's spectacular growth and its founder's gain from poverty to wealth has been repeated numerous times. In 1989, Olivia Lum left a successful career in pharmaceuticals to launch a company dedicated to finding sustainable solutions to the world's water crisis. Lum, an orphan who grew up in a tiny Malaysian village, was able to persevere through the challenging early stages of her business career because of the tenacity she demonstrated in her youth. Lum's 14-hour workdays paid off by the late 1990s, and Flux's innovative membrane technology had gained widespread recognition. The IPO occurred in the beginning of 2001. It also won its first municipal water treatment project that year, which was to provide and install the process equipment for the first new water facility in Bedok, Singapore, the Tuaspring desalination plant, Singapore's first saltwater treatment facility, and the third new water plant, located in Seletar, were two other major projects that followed. Beyond Singapore, Flux has completed projects in northern China, India, Algeria, and Oman. Along the way, it attracted Temasek Holdings, a state-owned investment corporation, as a stakeholder, although for just a few years from 2003 to 2005, Flux found its success by 2010. It reached a staggering 2.1 billion Singaporean dollars in market capitalization, 569.7 million Singaporean dollars in sales, 88.5 million Singaporean dollars in net profit. From making waves to drowning in red ink, in October 2010, Lum decided to construct Singapore's second and biggest desalination plant in Tuaspring. PUB issued a request for proposals. According to the trade newspaper Global Water Intelligence, Lum hired experts and started researching the local power sector, since she wanted that for Flux. Her plan to construct a power plant included an impossibly low bid to deliver water in the first year for 0.45 Singaporean dollars per cubic meter, which she thought would be profitable. PUB received 9 proposals at the end of October. When the procurement period ended, Flux's bid was much less than the other companies, such as Kebelseger's, which was 0.67 Singaporean dollars, and Sembcorp Utilities' $1.42 per cubic meter. It was also much less than the 0.78 Singaporean dollars per cubic meter cost of water during the first year of operation at the Tuaspring desalination plant. Tuaspring in the bag, but doubts surfaced. In March 2011, Flux was selected as Tuaspring's preferred bidder 5 months after it first filed its offer. It would be the biggest deal the organization has ever had. In the face of intense competition, the company was able to win Singapore's second seawater desalination project in 2011, according to the company's annual report. Former analyst Kerry Wong, who has followed Flux since its IPO, remembers how the company's expansion into the energy sector was a topic of inquiry at an analyst briefing. When they first announced the idea, many analysts and business people wondered why on earth they wanted to take power. Someone could ask, why are you challenging yourself? Is it within your capacity to carry out an endeavor of this nature? Individuals were a little hesitant. Well, in February 2011, Wong told CNA that despite Flux's low price, the company was very bullish about the possibility of profiting from the sale of surplus power. Indeed, in an affidavit dated February 15 of this year, Lum claimed that various parties, including regulators regulators, professional advisors, and project finance lenders had validated and approved the technical and financial viability of the Tuaspring project. Prices for exchanging electricity were about 200 Singaporean dollars at the time, making the project appear feasible. Wong, currently the vice president of portfolio management at Ascend Capital Advisors, said that no one had predicted the price drop. In retrospect, that was the final straw that broke their backs. After the agreements for almost 2 years, the company was almost doing well, but the problems started coming their way as analysts predicted. Challenges emerge. The first delay in connecting Tuaspring to the national grid was reported by Flux in May of 2014. It didn't start supplying energy to the grid until February of the next year, far into the second part of the following year. Though it predicted persistently low electricity prices due to an oversupply was expected to continue impacting near-term profitability. In its 2016 annual report, the company ultimately decided to cut its dividend. In addition, its revenues were squeezed by external factors, including falling crude oil prices and ongoing political instability in the Middle East. As a result of the Arab Spring upheavals, it continued its aggressive borrowing practices in May 2016 by issuing perpetual securities at a rate of 6%. As before, it had soaring interest from individual investors, prompting an increase in the amount of the issuance from 300 million Singaporean dollars to 500 million Singaporean dollars. One of the subscribers was Max, the retail investor who owned preference shares. Olivia Lung was reported in the annual report as stating, "The strong demand for the securities is testament to the market's confidence in Flux." Divestment of Tuaspring in February 2017. Flux's finances suffered as a result of the ongoing decline in power prices. Flux recorded profits of 4.8 million Singaporean dollars for the entire year ended Dec 31, 2016, a dramatic reduction of 91% from the previous year. This was the first indicator of trouble and occurred 8 months later. Electricity prices were lower than projected, and the firm said that this substantially wiped out its earnings. If the Tuaspring plant losses were removed, annual profits would have been 118 million Singaporean dollars. As part of its asset-light strategy, it has chosen to dispose of a portion of its stake in Tuaspring. Flux's efforts to find a buyer were complicated by the company's losses at Tuaspring. Flux reported its first annual loss since going public because of this failure to materialize in 2017. Losses of 81.9 million Singaporean dollars were incurred alone by the Tuaspring integrated plant. It also said that the partial divestiture of Tuaspring would have to be finalized before it would redeem its 400 million Singaporean dollars tranche of preference shares. Last month, Ang told CNA that the fact that investments denominated in Singapore dollars have never been redeemed is no longer just a warning sign. That spells disaster for a company with already strained finances. Since his study came out in 2017, Ang has been fielding questions about it, and experts have been debating whether or not Flux can unload its crown jewel. Despite this, during a results conference in February, Lum reaffirmed that Flux would not accept a fire sale below Tuaspring's book value and that there were still interested parties. According to a Bloomberg report published on May 22, 2018, the company Flux was considering filing for bankruptcy in order to better negotiate with its creditors. Flux did not respond to emails until late that night when they said they had filed with the Singapore High Court for court-supervised debt restructuring and an extended 6-month moratorium. The company's shares and other securities listed on the Singapore exchange were halted trading the day before. The company's market value dropped to 165 million Singaporean dollars at the end of trading from its all-time high of 2.1 billion Singaporean dollars in 2010. Tens of thousands of Flux retail investors received a big shock at the announcement. Flux Singapore's bankruptcy has raised several economic issues. Accountability, reparation, and learning from this business collapse continue. Flux's demise is a sobering reminder that no firm, regardless of reputation or ambition, is immune to business's stormy waves. Stakeholders can only avert future disasters and protect Singapore's business environment by answering these questions. Well, this was all about the collapse of Flux. I hope you liked this video. Make sure to like this video and subscribe to our channel. See you in the next one. Till then, stay safe.